Another round of first quarter earnings are showing that higher for longer interest rates have continued to take a toll on U.S. regional banks, even for the largest regionals. However, our next guest says higher interest rates can improve future earnings. He's got 3 regional bank ideas that he's bullish on. We've got Alexander Yokum, equity research analyst at CFRA, joining us now. Alex, thanks so much for joining us. Before we get into your ideas, this is a sector that has really struggled to get off the mat, either on a year-to-date basis, even in the month of April, it has struggled. What did you learn from earnings season that was kind of applicable across the board?
Yeah, thank you. Thank you for having me on. I would say the number one takeaway from this quarter was that deposit costs are here to stay and they're continuing to rise. So, one thing we heard last year was that, deposit costs were going to rise, as interest rates increased. But once interest rates stopped going up, we would see deposit costs kind of hold steady. And we haven't seen that. We've actually seen deposit costs continue to rise each quarter, even though interest rates have been steady. So that has been a pretty big negative impact to earnings.
What about the other sore spot, which is commercial real estate exposure?
Yeah, so credit quality has been sort of a mixed bag. It has definitely got worse. We did see credit quality this quarter definitely get worse than pre-pandemic levels for most regional banks. So that is a negative. But I would say expectations have been so negative for regional banks that, where we've come in at credit quality, I would actually say is sort of a net positive. We didn't see any, major blow-ups. Commercial real estate, we have seen losses, but office is where a majority of those losses is, and that has been manageable. Multifamily, that was definitely a scare last quarter with New York Community Bancorp. We didn't really see major losses there this quarter. So overall, getting worse, but based off expectations, not necessarily as bad.
Yes, and New York Community Bank is still, a shell of its former self. But to your point on, crisis banks that were worried about going away, have we at least found stable footing in that? Or do you think that, if these conditions persist, worsening credit, high interest rate environment, that we could yet see maybe another failure or two?
I would say that's likely behind us. The one scenario where we could see some more trouble is if we did see long-term rates, let's say, rise another 2% or more. That's where some banks could really be in trouble because they still have those, underwater securities portfolios. And as interest rates go up, those losses get larger and larger. And that is, what took down Silicon Valley Bank. So as of now, we would think they're okay. But if there's a big uptick there could be some more issues.
Okay, so against this very difficult backdrop, you've got to find ideas that look good out there. What do you like?
Yeah, so generally speaking, regional banks have had a tough time, but there are definitely some winners there. One winner we do like is East West Bancorp. They are in California. And most banks are struggling with loans, are struggling with the deposits. They actually hit all-time highs in both loans and deposits this quarter. They target Asian Americans, which are generally growing quicker than the U.S. as a whole. So that's a good tailwind for them. And in terms of credit quality, they're actually about 50% better than the typical regional bank, and they're very well capitalized. They're one of the best capitalized banks in regional banking. So, we like them for sure. Another bank that we used to be a little bit more neutral on is Citizen Financial Group. We have now upgraded them to buy. One thing we like about Citizens Financial is they have dove into private banking. So they're trying to get private banking, kind of high net worth customers. And we think that may have been a little bit of negativity with that because they actually hired a bunch of First Republic bankers. And they're somewhat copying that bank in terms of wealth management. But we want to make it very clear that, First Republic's wealth management aspect of the bank was very strong. It was their risk management, which was the issue. So as long as Citizens sticks with the wealth management side, we think they're going to be okay. Yeah.
What about, something in the so-called super regionals, where you're not quite a major bank, but you do have, a little bit more of a stronger presence than maybe some of these smaller players?
Yeah, so in the larger regional banks, Fifth Third is a solid pick, very well diversified. they're also, underexposed to commercial real estate. So, although we think those losses, haven't necessarily been that bad so far, they definitely could get worse. And Fifth Third has, in terms of office exposure, they have actually just 1/3 the office exposure as the typical regional bank, and they've actually seen no losses in commercial real estate over the last year. So they've been very well prepared. We would expect some more losses going forward, but generally speaking, they've been very careful with their loan book, and they've actually also seen strong deposit trends. Generally speaking, they didn't see large outflows, when Silicon Valley Bank collapsed. So we kind of think they're a strong bank that should be able to weather a tough storm if that would come.